Hello guys and welcome back to the channel. So in this video I want to talk to you about that I think that we're in a very special place in the market that is basically a golden opportunity for long-term investors, and I think that this goes largely unnoticed. And the reason why I think that is we might have hit a bottom in October, November, December when the stocks were really down, and now we are in a range in the stock market where the market is trading sideways, and it looks like it's going to trade sideways for a very long time. So this means that the long-term investors like you and me can really accumulate on positions that we like, and we're going to be very happy, 5, 7, 8 years from now that we were able to buy at these prices. And I saw a video that very recently came out on CNBC, and I so much agree with the people were saying here, and it's a perfect illustration of what I mean. So we're gonna watch that video together, and then I'm going to give you where I agree and disagree and why this is amazing for us long-term investors. So if you like this, all I ask is that you hit the subscribe button and maybe give me a like. That helps out with the algorithm, and that's all. So let's begin the video.
So Josh, I go to you first before I bring it on the desk. Do you feel like sentiment has improved for stocks overall?
No, I think a lot of the positive breadth is happening back in the large caps and mega caps. And I think if we're talking about stocks overall, I would not say sentiment has improved. I think you now just have a new leadership group. It happens to be a very widely owned leadership group, which helps move the chains in terms of the index. But this is really a Q's outperforming the S&P. You look at the month of March, 8% versus 2%. That's pretty notable. It is the third month of QQQ outperformance in a row. That is the first three-peat monthly outperformance. You have to go back to June through August of 2021. So it's been a while since we've seen this particular group of stocks at the top of the charts. It's nice to see. I think, again, these stocks are owned by everyone, so people are enjoying that. But I would not take that and say, hey, everybody loves stocks again, because I can show you a lot of pockets of the market where you're seeing struggling still for stocks just to tread water.
This is so nice because, as I've been saying in so many videos, when you're at the market bottom, you will not know it, right? And two, everybody is going to be negative. And when you start having, the beginning of the new bull market, everybody is going to doubt that it's a bull market. So it's very nice to see, bulls, bear, and everyone say that, okay, yes, stocks have gone up a little bit, but, it doesn't mean that people love stocks again, and the sentiment is very bad, and there is a lot of stocks that are struggling, and this is exactly what you want to hear at the end of a bear market. Remember when it was March and April, May, June last year, and everybody was like, buy the dip, and we were in the middle of a bear market. Now you don't even hear anything like that from the bulls, right? And this is when you know that everybody has capitulated from the market. Okay,
so what prevents you from being more positive then, from feeling you're in your own mind that your own sentiment has improved or turned?
Very good question.
Well, I think we've had some major issues with some very large banks. The FDIC is probably the last competent government agency there is. It's non-political. The leadership is not on Twitter. It works as advertised. In 90 years, not a single depositor has lost money when they were insured by the FDIC. And so I think it's been really refreshing to watch them step in, sell one bank, wind down another, and basically shore up the situation. And the fact that that has happened, combined with the fact that we've seen a retracement in interest rates and treasuries, I think has been really helpful. And that pretty much explains why we're at 4,000. Tell me the story of why that would translate into 4,400 or 4,500 anytime soon. I really can't picture it. I don't think we're going to start hearing great things about earnings when the season starts in 10 days or so. And you've already gotten the benefit of easier interest rates and a falling dollar. What's the next benefit that we're getting here psychologically? I don't know where it's coming from. So that's what...
So I love what he's saying, because I feel that this is exactly what the general market is thinking, and this is what's giving us long-term investors the edge. So he's saying, yes, we have this temporary rally, but what would make the market go higher, right? And he's discounting a lot of things. So first of all, he's discounting that usually the stock market bottoms 6 months before the earnings bottom. And he's saying that the earnings are not going to be amazing. And maybe he's right, maybe he's wrong, but it's totally possible that the stocks have bottomed and we still will get bad earnings, right? Then the second thing that he said, that yeah, we have gotten a relief now because the Fed didn't raise 50 points, but we are very, very close to the end of cycle for the raising with the Fed. And if you look at inflation, like think about it, the market has the kitchen sink, everything thrown at it, and we are still going up. We still have the war with Russia. The interest rates are very, very high, and you know, we will get bad earnings. And the market is still going up, and even and now, okay, it starts to be very, very hard to focus on bad things, because you know that the inflation rate is very steadily going down. So that means that you know that the rate cuts are coming. The question is it the end of the year? Is it only next year? But you know it's there, and you know that the rates are not going to significantly go up. Maybe there is one more increase, and then that's it. So if you're really forward looking in the future, all you can see is the situation from here is going to get better, not for real estate, but for stocks. So I really like how he explains his logic, and this is what I believe 99% of investors see, and this is why we are going to trade in a range. Again, fantastic time to accumulate your favorite stocks.
Prevents me from being as constructive as I'd like to be. And I hope to be wrong. I hope to be able to change my mind. But that's where I am
Even our resident bull, Jim Leventhal, you've grown incrementally more negative of late rather than, you know, getting more bulled up.
You see, even the bulls are becoming negative.
But yes, you're accurate.
It is true, though, right?
You're accurate in what you say, because
I mean, incrementally, it's like I'm talking about like
right. That's why I gave him that look.
Guys, look at the time. So Tom Lee is less bullish than he usually is. This guy is like the paid bull to be on the CNBC panel, and they are admitting that he is less bullish than usual. And the funny thing is, I made a video in end of December or early January, I can't remember exactly, and my point was that Jeremy Financial Education, the ultimate bull, who is always buying, he made a video that he is not buying in December because he has been so badly hurt with, you know, Tattooed Chef and other things in the market, and he built up like such big positions now that he wants to pause his buying. And in the video I said this marks the bottom of the market, and the funny thing is I might have been right on the money with that one. So when you see and this is because to get a market bottom, you need all the, okay, for you to get the prices to keep going down, you need bigger and bigger volume of sellers come in wanting to sell. And at one point, everybody that wants to sell has sold. And at that time, it's impossible. Like if you have 95% of the market positioning themselves for the downside, it's impossible to get a bigger number of sellers because everybody is bullish. And once the sellers run out, you only have buyers left. It's a very funny thing. So at the bottom, everybody is going to be super negative, including you and me. So it's very important to be able to control your emotions. So very, very interesting times.
Paper through that? Barely.
You really should have seen the look that Steph just shot me. It was not a good look. But you're accurate in what you say. Look, I have to respect what's gone on with the banking system. I have to respect the tightening effect of a credit crunch that is starting to unfold right now. And I also have to take account that this Fed, and I'm going back to last week's move, I really don't think they get what's going on here, and I think they're going to make a bad situation worse. On the flip side, though, Scott, and this is why you're appropriate to just, put your fingers really close together. There is strong economic activity. We know that. There is strong economic activity here in the U.S. And it's not just, the supply chain onshoring.
I got you. I mean, bank fears have eased. We are closer to the end, we think, with the Fed than we are the beginning. You can try and string together a incrementally more bullish case if you want to.
So I catch your tone, I catch your word, and I agree with the tone and words. And that's where I'm saying I do think sentiment is positive, but boy, is it tenuous, okay? Because if I'm going to say something like right now, we talked about this 2 days ago, Josh was here, you know, cars need to be manufactured right now. They need to be manufactured. We've got 12.2 years is the average age of cars. They're falling apart, and you can see it on the road. Dealer inventories are low. So that needs to happen. It's going to happen, and that's going to inure to the benefit not just of GM and Ford, but the suppliers, whether it's NXP or Cleveland Cliffs, which almost half of their business is automotive steel. I told you I had dinner with Lorenzo Gonçalves last night, the CEO of Cleveland Cliffs. There's also Boeing. And again, you know, Boeing will produce planes and deliver them as fast as they can get engines. I'm sure we'll talk about GE later, which is a major point of that. But my general point here is economic activity is real and it's strong.
Again, this recession or downturn has been very weird because we actually got a technical recession, but unemployment was very, very high. So it was never called an actual recession. And now we are towards the end of it, but because it was never called a recession, everybody's still waiting for it to happen, and they might miss that it never happened, right? Or it happened, but it was never called what it was. And unemployment, we might actually get a soft landing. And I'm going to tell you something that is very controversial. I think that the Fed did the exact right thing, shocking the system and raising the interest rates as fast as they did. I'm in the real estate business. I have hundreds of apartments that we're building in South Sweden, and we have had an insanely hard time to sell apartments. Why? It's because people knew that the interest rates are rising and they can't think with how much their apartment is going to cost, and then the safest thing is just to wait with the sale. But now that we are at the end, so it was like a few months, we came to the end of the rate hike cycle, hopefully also in Sweden. And that means that people can think again, and they, even though it's much more expensive, but still they know, okay, I'm paying $2,000 a month, and it's not going to be $3,000 or $4,000 in 5 months, so they feel safe to start buying again. And this is exactly what we're seeing on the market, that we are able to sell apartments again. And I believe that because we're in the information age, and you know, if you tell people that we need to continuously raise interest rates and the Fed does it slowly, I believe that it hurts the economy more for longer in a weird way, because people can wait 2, 3, 4 years more to, you know, wait for the cars, wait for the real estates, because they know that the rates are going to go up. It's really, really weird. So this is something very controversial. I'm very happy that we're towards the end of this downturn, and I'm very excited for stocks. You know, my 3 favorites is Enphase, Tesla and Palantir, not necessarily in this order, and I'm trying to load up on these positions as much as I can, and I will keep you guys posted. Let me know what you think. Let me know what stocks you are looking at, and do you think I'm correct in my observation, or are you waiting for a new major low to happen? I guess nobody's expecting a bull run, but let me know if you are. So make sure that you're subscribed. Thank you for watching again, and I'll see you in the next video. Ciao, ciao.